don't trade it thesis. But I've been so attached to Apple for so long, I was thinking maybe we need an unemotional second opinion on the stock. So tonight we're going off the charts with the help of Carolyn Borodin. She's that brilliant technician who runs the FibonacciQueen.com website. I always call her the Fib Queen. It also happens to be one of my colleagues at RealMoney.com. Take a more quantitative look at the action in Apple. Her diagnosis? She thinks that Apple could soon be ready to rebound. She's probably the only person
that would be nice.
Me. Perhaps even climbing back to new highs. I'm cautiously optimistic. Why?
Bought
Because
some
of a
at
little concept called
$200.
symmetry. Now, Borodin often invokes the idea of symmetry when comparing declines to other declines or rallies to other rallies in a particular security. If a stock has a history of bottoming after it falls, say, 10 points, there's a pretty good chance that it will reverse after the next 10-point decline. Look, I know this sounds simplistic. It's kind of like something that you would think a child would have thought of, but wait a second. It can't possibly be that simple. Technicians like Borodin don't claim that there's some immutable law of the universe that means stock swings in the same direction tend to be of similar magnitudes. But the Fib Queen's been doing this thing for 31 years, and she's found that symmetry shows up pretty often in the markets. We don't need to know why that's the case. We just need to know that it happens often enough to be worth paying attention to when we're searching for key levels where a stock is likely to change direction, particularly an emotional one that, the one that Apple's become. For example, here's something away from Apple. I want you to take a look at the weekly chart of a paint company, Sherwin-Williams. This past spring, Borodin predicted that the stock would rally. How right was that? Okay. And she was just, well, I gotta tell you, it was perfect. What gave it away? Well, Sherwin-Williams had just experienced a $72 decline. So the Fibonacci Queen did her symmetry analysis. The previous decline had lasted for $73. The one before that was $76. If symmetry held, then the stock was going to bottom somewhere between $359 and $362. Sure enough, the actual low was made at $362 and change.
I love Fibonacci retracements.
But when it does,
they
you can
work
catch some
so
amazing
good.
moves. Although Sherwin-Williams has now given up most of its gains, I wouldn't be a buyer at these levels. It's too tied to housing. But the fact is, you didn't need to be, right? I mean, look at this. Nice, huh? That was a big move. You wanted to catch that move. She's not saying buy it here. So it's not always that simple. But you would be surprised at how often the symmetry method works. In fact, it's worked many times before with the stock that she has really nailed over and over again. Apple. I want you to take a look at the weekly chart. Way back in 2016, when the stock was getting slammed, Borodin called the bottom in Apple at $89. It was unbelievable. And no one else thought it that I know of. And symmetry was one of the things that told her the stock was done going down. Apple experienced a $45 and change swing from its September of 2012, right here, okay, highs to its lows in April 2013.
Usually
so when it
compared to other big drops.
In May of 2016, Borodin suspected that the stock might be ready to change course. We checked in with her in September of that year when the stock was at 104. Another dicey moment for Apple stock. And she predicted Apple would climb to 146 at a minimum. Obviously, we blew past that target. And every other upside target Borodin came up with just because Apple's company is that good. So now Apple's stock reflects that. So what do we do now that it's pulling back? Hey, how about we try the same thing that worked last time the stock had a sustained decline? Remember, last time Apple declined by 45 points before bottom. That suggests we might have another 10 to 15 points of downside before the pain comes to an end. What about the rest of her methodology? Remember, Borodin likes to measure past swings in the stock and then run them through the prism of Fibonacci ratios, an important series of numbers discovered by medieval mathematician Leonardo Fibonacci to find crucial support and resistance levels. When you do this with Apple, you find two zones, okay? There's a potential floor of support running from 196 to 198.
It bounced off of 198 already, so that's
running from 186.
That's the one I'm going with.
If the rally at Apple's going to resume, Borodin says that ideally we want the stock
it wouldn't
to
have bounced off the
between
198 if it was going to go down to the 192.
Which is just over $5 below where the stock is currently trading. So, you're talking about not that far.
Nice line.
At least on a percentage basis. How about the daily chart? Let's look at that. The support level in this short-term pictograph of the action, it looks a little different. The crucial area for Apple here is 195 to 198. Pretty relevant, huh? If the stock starts falling again, that's where Borodin would expect it to find support. And that would be, let's just say, if it starts falling again, a lot of people are going to think it's going to go down like this. She thinks that's not going to happen. Now, but remember, her methodology applies to both price, the y-axis of the chart, and time, which is the x-axis. Okay, down here? It's the same formula. She can tell you levels where the stock is likely to change course or dates where the stock is likely to change course, all based on its past swings viewed through this filter of Fibonacci ratios. When you run these past swings through a prism, Broden says you find a cluster of 5 Fibonacci timing cycles. Okay? All come due this week. In other words, when you put it all together, she expects Apple to make an important low sometime this week. Maybe, just maybe, it already has.
It already
Now,
has,
before
in
she
my
gets by,
opinion.
Broden has a trigger she likes to look for. She suggests pulling up a 30-minute chart, a chart where every tick represents half an hour of trading, and then looking for a crossover in the exponential moving averages. She likes to see the 8-period moving average cross above the 34-period moving average. Remember, each period is a half an hour, and that's her trigger, what tells her time to buy. But I don't think you need to be that
34th?
granular. What matters for us is that Apple has a powerful floor of support here. If that floor holds, Broden believes the stock will quickly find its footing and go right back to rally. As long as we don't violate the recent lows, she thinks Apple can potentially zoom to new highs. She thinks it could go to the 243 area.
Cha-ching!
Of course, if the stock breaks down below its floor of support, well, then the whole thesis goes out the window. The bottom line, the charts, as interpreted by Carolyn Broden, suggest that Apple might not have much more downside before
I love
it bottoms.
technical analysis.
And that likely it
It
bottoms
works
sometime this week and then starts climbing again. As for
good.
me, I think it's too hard to trade in and out. That's not my thing. Apple's a great company with a cheap stock, and I'd be a buyer here because given the size of the company's buyback, I'm confident Apple will be buying right
And I think
alongside you.
Apple is going to get a
Greg, you know
PE
what, Greg?
multiple expansion because they're going to start getting
What's up?
As a boat captain,
valued as a software instead of a hardware company.
Thank you.
And software companies get
What's up?
higher PEs,
I own TiVo. I'm down a lot.
which is why they quit
6%.
giving the numbers to their iPhones and iMacs. Just my
But they're
opinion.
still signing up partners. They're also looking to sell the company. Should I hold on to it?
You know what? I'm going to say no. I'm going to say that there
Oh,
are better
Apple's done?
buys. By the way,
Yeah.
you mentioned the one that I like from a travel trust. Why don't
I
some
recommend
Comcast?
Apple.
Okay, work for Comcast.
If you can
It's
get it
terrific.
below
The stock's up
$200,
7,
$199,
stock went down $7.
$198, that's a
If they announce
definite
deal
buy.
To be able to buy,